Okay, I wanted to do one more quick video on dollar cost averaging because, following the video that we did before this one, video 103, I think it is, where I went through the mechanics of dollar cost averaging, this video I just want to share some thoughts on why it works from sort of an emotional and a mental standpoint, which in many ways it's much more important than the mechanics of how it works, right? I think when you set something on autopilot, right, and you've decided, okay, I want to have exposure to the S&P 500 or exposure to this energy ETF or exposure to Bitcoin, right? You allocate a certain amount of money that you're going to apply with a certain periodicity, once a week, a few $100s, or once a month, a few $1,000s, whatever your decision happens to be. You just set it and forget it, and the purchase is going to happen whether you agonize over it, whether you think about it or not, right? And so there is zero bandwidth wasted when you make a decision like this and set a program in action. So you don't have to worry about, well, is today a good day to buy? Or you don't have to worry even about thinking about buying. Is tomorrow a better day? Will the price be lower tomorrow? Or maybe the price is going higher. Maybe I should buy, right? All of these questions that kind of dog you when you're trying to think about making an individual purchase, not a sequence of dollar cost averaging purchases, but an actual individual purchase. And then once you make the purchase, you'll check the price to see if it goes lower. And it's just all of that. You're spared all of it. You just set the dollar cost averaging in motion and it takes place, right? And furthermore, there's no emotional roller coaster either. No emotional bandwidth expended. You set it and forget it, right? So this is a great way to produce assets over the long term, augment your capital over time without having to get caught in the weeds and caught in worries about whether you're doing the right thing each time you make a given investment decision. You've actually made a series of investment decisions with one decision, and so there's tremendous scale from it, okay? And then the other aspect to talk about is the humility of dollar cost averaging. The most dangerous thing in investing is arrogance, right? Or overconfidence, or as I like to call it, epistemic arrogance, where you think you know something or you think you know the best time to do something, but you're mistaken in that knowledge. You're overconfident in your level of knowledge about something. Dollar cost averaging is an act of epistemic humility, a tremendous act of epistemic humility, and that's good. Epistemic humility is what keeps you from overextending yourself. It keeps you from being tricked by your own lack of knowledge or your own ignorance of something, thinking that you know something that you don't. And so this is another tremendous, tremendous value in dollar cost averaging. You're not making some kind of statement about, I know today's a good day to buy rather than tomorrow, or I know these prices are good prices to buy at rather than those. No, you're just buying a fixed amount on a regular periodicity, and there's no arrogance at all about it. It's actually very, very humble, okay? And then, mechanically, obviously, dollar cost averaging lets volatility work for you, right? When the price is volatile on the downside, this week's or this month's purchase will buy you more shares or more Bitcoin. When the price ticks higher on volatility, you buy a little bit less, right? And so you don't have to worry so much about FOMO, the fear of missing out. A lot of times if a price starts ramping, it makes you want to buy, and that usually separates you from your money. And likewise, when a price starts falling, it makes you want to sell, right? These are kind of normal herd-based emotions that humans have. So the dollar cost average process, dollar cost averaging, separates you from this sort of domain of mistakes too. You don't really have any emotional baggage at all, and there's no FOMO, there's no fear of getting panicked out of a bear market. You're just going to keep sequentially buying with the amount that you've decided to allocate, and it's done. It's just going to progress going forward. And in years, in a long range time period, you're going to look in the future and see that you've been very effective with this one decision that you made, and you've avoided a lot of emotional baggage on the way to that future time period, okay? So these are sort of the emotional and cognitive benefits of dollar cost averaging. Felt it was important to share that aspect of this process too, all right? Thanks for watching.